Hello everyone, how are you all? Hope you are doing good and I'm good as always. So I really hope we are going to complete all the theory units 5, 6 and 7 today. Also, for the first 1 to 3 units, we have pending discussion regarding illustrations and MCQs and true or false of those respective units. I I try to cover all these by today so that we can start the practical chapters from tomorrow, and from tomorrow onwards it will be very fun. It will be like better for us. Before that, please like, share and subscribe to the YouTube channel and share with the people who are interested in taking classes and taking fun and interested classes. And I will provide a Telegram link in the description. Please join the Telegram channel. Why? Because we can interact over there. We can have discussions, doubt solving sessions over. Okay. Right now, you might not have essential doubts because of all theoretical nature. Because you just have to understand the process. Remembering is another thing. You have to understand the theory. That is the first thing. So, going forward, it will be better for you and me to interact in Telegram channel, or if you want, we can have a group in the WhatsApp. Okay. So, chapter 5 is accounting policies. What is accounting policies? Accounting policies are the principles. Okay, we will go about this later. Wait a minute. Accounting policies are principles and methods of applying those principles. Oh my God. If you remember in chapter 1, unit 2, I haven't discussed with you about the definition of accounting principles and accounting conventions, right? I hope you remember, and if you forgot, it is very good for me so that I can slide many topics under the carpet. Okay, bad joke again. So, accounting principles. Basically, the definition they have provided to us is very technical. Fundamentally, accounting principles are the accounting rules. Just keep writing here. I didn't have my tab and pen right now. Okay, I'm just doing this on the laptop itself. Just bear with me for this one chapter, one unit, one chapter, first chapter. From the second chapter onwards, we can have a lot of fun with our pad or tab, whatever you call it. 1 minute. Okay. Accounting policies are specific accounting principles. What are accounting principles? 1 minute. Hmm. I'll check whether I can pause the video. I don't think so. Well, accounting policies are specific accounting principles. What are accounting principles? Accounting rules plus methods of applying those principles. The way we are going to apply the accounting rules and accounting rules themselves are accounting policies. Okay, this is the definition here. This is blah blah character adopted by the enterprise in the preparation and presentation of financial statements. Instead of writing preparation and presentation of financial statements, write in your notebook PPFS, preparation and presentation of financial statements. Why accounting policies are adapted? For preparation and presentation of financial statements, right? Adopted by enterprise. What are accounting policies? Accounting policies are specific accounting principles, specific accounting rules, and methods of applying those principles. The way we are going to apply those accounting rules is also included in the accounting policy. Policies are based on various accounting concepts, principles, blah blah blah. This is they are just saying we have covered this in unit 2 chapter 1. There is no single accounting policy. You can have a doubt, sir. Why are there many accounting principles instead of accounting principle? Because of the dynamic nature of businesses. The way we value inventory and the way we value real estate land is way different. The law is different. For real estate, RERA applies, and state laws of that RERA applies, and there are many more compliances. But for inventory, Companies Act applies, and accounting standards apply. Accounting standards, we'll cover this in another chapter. 1 minute. So the business is very dynamic in nature, which is why there are no single set of accounting policies or principles, right? All in all circumstances. Enterprises operate in diverse and complex environment situations, so they have to adopt various policies. The choice of specific policy, accounting policy, appropriate to the specific circumstances in which the enterprise is operating depends upon the judgment by the management. We talked about management judgment in the previous class. So, uh, what specific accounting policy to be followed? What specific accounting policy is to be followed depends upon the judgment by the management. Okay. ICAI has trying to reduce the number of acceptable accounting policies through guidance notes and accounting standards in its combined efforts with the government and regulatory agencies and progressive management. Basically, who issues accounting standards? ICAI along with the government. In accounting standards itself, accounting policies are there. Actually, in accounting policies, accounting standards are there. Vice versa, I don't know. Okay. So, for accounting policies, in order to reduce them, so that for a chartered accountant to like you and me, for a little less complication, ICI is trying to reduce accounting policies to minimal nature so that our efforts can be reduced. Already it has achieved some progress in this respect. Okay. The very basic examples of accounting policies where we apply are inventories and investments. Just imagine where inventories and investments are shown in the balance sheet. Ask yourself this question. And I think where in profit and loss, right? I think it's, oh no, inventory is an asset. Investment also is an asset. In balance sheet, in asset side, okay, this is, sorry. In asset side here, inventories and investments come. Okay. If you want, you can just draw here so that you get to practice and uh, your mind automatically maps itself. Okay, inventory. Okay, balance sheet, current asset. Okay, we'll talk about current asset and fixed asset later. Total assets. Investment, depending upon the tenure, long term or short term, it comes under current or non-current asset. The list should not be taken as exhaustive but illustrative. Like accounting policies are not confined to these two. There are certain other things. Sir, what are those certain other things? I don't know. Then how did you pass CA intermediate and how are you going to write CA final group one? God knows. As the course progresses, student will blah 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 blah. Basically, they are telling you as you go through CA intern and CA final, you are going to face various accounting policies, right? So what exactly is accounting policy? Accounting policy is basically the specific accounting rule. What is rule? Principle. And the way we are going to apply the rule, methods of applying those principles in the adopted by the enterprise, blah, blah, blah. You can read it. Selection of accounting policy. Accounting policy selection is important policy decision which affects performance measurement as well as financial position. Basically, they are saying it affects performance measurements, which is profit and loss account, financial position, which is balance sheet of the business entity. Selection of inappropriate accounting policy may lead to understatement or overstatement of performance and financial position. Basically, it might, wrong selection of accounting policy might reduce or increase. 1 minute, I'm sorry. Reduce your audio. 1 minute. Sorry. Selection of inappropriate accounting policy may lead to reduction, may lead to understatement or overstatement of performance. Sorry, of performance and financial position. What is financial performance? Which financial performance? Sorry, my friend is disturbing me. Sorry. Financial performance is profit and loss, and financial position is balance sheet. Thus, accounting policy should be selected with due care after considering its effects on financial performance as well as financial position. It is believed that no unified or exhaustive list of accounting policies can be suggested, which has universal application. There is no single accounting policy which can be applied to every business. Three major characteristics which should be considered for purpose of selection in order to select and apply. 1 minute. In order to select and apply various accounting policies, there are three things we should consider, which are PMSP, prudence, M, materiality, and S, substance over form. You know materiality. I talked about this in second chapter, I guess. Second unit, I guess. You know substance over form. You know prudence too. Basically, prudence is we cannot understate profits and assets cannot like reverse, sorry. We cannot overstate assets and profits. We cannot understate in expenses and liabilities, right? Basically, inventories are valued at cost or NRV, whichever is lower. Just keep this in mind. What is NRV? Net realizable value. What do you mean by net realizable value? We'll talk about this in the respective chapter. Investments, which are long-term. Long-term investments are valued at acquisition cost. What is acquisition cost? The cost at which the cost which you paid to acquire the investment. Provision for permanent decrease in value has to be made whenever necessary, wherever necessary. Read this. So this is the last topic of this short unit, changes in accounting policies. There are two instances where you can change your accounting policy. Accounting policy which is required by statute, law, or for compliance with accounting standard. Either accounting standards tells you to change or law tells you to change. Change would require in more appropriate presentation in financial statements. If change in accounting policy helps you for more appropriate presentation, more accurate presentation, better accurate presentation of financial statements, then you can change the accounting policy. Change in accounting policy may have material effect on items of financial statements. For example, inventory valuation, cost formula, FIFO, or weighted average can be chosen. You just read this example, these two examples, okay? And the chapter, the unit is completed. We have to do this. There is a single set of accounting policies which are applicable to all enterprises in circumstances. Nope. The answer is wrong. False. Selection of accounting policy does not impact financial performance and financial position. False. We have just covered this. A change in accounting policy should be made as and when business like to show result as per their choice. No, it's not as per their choice. It's based on statute. The topic we have covered just now are based on better presentation, appropriate presentation of financial statements. Choosing accounting policy FIFO or weighted average method for is a selection of accounting policy. This is true. Selection of inappropriate accounting policy will overstate the performance and financial position of business entity every time. True. Wait, is this exactly true? This is how the ICAI tricks you in the examination. We have read this and absolutely there is no, this is exactly the right answer. Read the question again. Selection of inappropriate accounting policy decision will overstate the performance and financial position of the business entity every time. Exactly right. But this is not only overstate, this also includes understatement. Okay. A change in accounting policy, 1 minute. A change in accounting policy is justified to comply with accounting standard, right? To ensure more appropriate presentation, right? The answer is C. Accounting policy for the second question. Accounting policy for inventories of Zeta Enterprises states that inventories are valued at lower of cost determined on weighted average basis. What is this? We'll read about this in the respective chapter. Or net realizable value, whichever is lower. Is this right? We talked about this. Yes, this is absolutely right. Which accounting principle is followed in adopting the above policy? Materiality? No. Prudence might be substance over firm. I don't think so. Why prudence? Because it ensures that profits are not understated or overstated. Expenses and liabilities are not understated. Assets and income are not overstated. The areas wherein different accounting policies can be adopted. Is it in depreciation? No, depreciation is accounting estimate. Oh, it is a spoiler. We'll talk about this in the next chapter, next unit. The answer is B, valuation of inventories. Selection of inappropriate accounting policy may overstate or understate, understate, or overstate. Accounting policies refer to specific accounting principles, right? And methods of applying those principles. Oh my God, it is right. So answer is C. Let's check this. C, B, 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 C. C, B, 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 C. False, 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 true, false. Yep. So the unit of accounting policies is done. They might ask you true or false from here. So just ensure, let's check the time. In just 20 minutes, we have covered this chapter unit. So let's go to another unit. Okay. After this, if we cover the accounting standards, this is very small unit. Okay, we have to read pros and cons. Limitations and advantages, features, how the Accounting Standard Board sets up accounting standards. Benefits, we talked about this. And this is all we can skip here. And the significant portion of this chapter is that the list. Okay. You don't have to read the list right now because no, let's keep that away. Let's start unit 2, time 20 minutes. I'll try to cover in another 20 minutes itself. 1, 2, 3, go. Again, 1, 2, 3, go. Okay. Accounting as a measurement discipline. Valuation principles and accounting estimates. This unit covers three things. First, accounting. Keep accounting away because every chapter, in every place, there is a name of accounting here. Measurement, valuation principles, and accounting estimates. There are three things we have to study here. Sorry. For the first portion, we talk about measurement. Oh my God, what is this? Elements of measurement. Oh my God, what is this? Valuation principle. There are four things here. Keep everything away. Keep worrying to yourself. Oh no, I'm sorry. Please don't worry. Measurement is a vital aspect of accounting. How do you measure? How do you measure inventory? We talked about this. Inventory is measured, valued at cost or net realizable value, whichever is lower. If there is no measurement, how do you show in your balance sheet? Right? What is the amount? I mean, how do you calculate the amount which is to be shown in the balance sheet? How are you going to show without knowing how to measure the value of either an asset of items of financial statements? What are items? Assets, liabilities, those list, loans, capital, etc. Those are all items of financial statements. Primarily, transactions and events are measured in terms of money. Okay. Any measurement discipline deals with three basic elements of measurement. Let's keep three basic, like, what are the elements? How do you measure? On what basis you are going to? On what basis are you going to measure? So that you can show in the balance sheet. This, the basis is what they are saying here. The basis and the basic elements are what they are telling us here. Let's keep this aside because we have a bit of discussion of these 3 points, three elements. Professor R.J. Chambers defined. If you ask me, you can skip entirely this, but uh, when I read this, I liked this point. Measurement is assignment of numbers to objects and events. According to the rules specifying the property to be measured, the scale to be used, and the dimension of the unit. Basically, no, like it takes away like whole lot of time to explain this. But measurement is assignment of numbers. For example, for inventory, the number of 1 lakh. In balance sheet, we write 1 lakh, right? Uh, Beside inventory. This is the measurement, assignment of number. 2, objects and events. This is an object, and the purchase or sale of inventory is an event. According to rules specifying the property to be measured, according to the rules, basically you read till here. These are the way we define the rules are these points. Okay, just ignore this and according to the rules. Okay, what are the rules? We talk about the rules later. Just read this. These are the rules. These are the elements. Identification of objects and events to be measured. What is object and event? This first one we identify this to be measured. This is the first basic element. Okay. Just write this in your notebook or essay material. identification of objects and events to be measured. We have earlier defined accounting as a process of identifying, measuring, and communicating and classifying economic information, which monetary information, to permit informed judgments and decisions by the users of information. Who are the users of information? Stakeholders. Decision makers need past, present, and future information. For external users like you and me, generally we get past information. Okay. There is no uniform set of events or transactions in accounting which are required for decision making. Okay. For example, in cash management, various cash receipts and expenses are necessary objects and events, right? Obviously, the decision makers need past cash receipts and expenses data along with projected cash receipts and expenses, right? For cash management, all we care about is cash receipts and cash payments. For the and in order to prepare what did how much cash did we receive and pay, we need data for past data along with projected data for future projection. For giving loan to a business, one needs information regarding repayment ability of principal and interest, right? This also includes past information, current state of affairs, as well as future projections. What is state of affairs? Not affairs. State of affairs is balance sheet. It may be mentioned that past and present objects and events can be measured with a degree of accuracy, but future events are only predicted. Past data can be recorded with a limited accuracy, right? And for uh, future projections, we can only predict. We cannot measure future. Prediction is essential part of accounting information, right? This is the first. Selection of accounting standard or scale to be used. So in for inventories, India is 2 for Indian accounting standards and accounting standard 2 for Indian companies. So uh, accounting standard, based on accounting standard, we measure, we talked about cost or NRV, whichever is lower, right? It is mentioned in the accounting standard. Just read this. You don't have to read this. Okay, you can skip this. Dimension of measurement scale. This is a new point. This is third point, but not exactly the third point. Okay. Ideal measurement scale should be stable over time. Measurement scale should be stable. Okay. Read the example and you will understand. If one buys 1 kg of cabbage today, the quantity he receives will be the same, even if he buy 1 kg of cabbage after a couple of years. Okay. So, the amount might change, but the quantity, this doesn't change. Okay. This might change based on inflation or etc. This is what they are saying. This is another basic element of measurement concept. Dimension of measurement scale. Just read this. Accounting as a measurement discipline. How do you measure a transaction or an event? An event. Unless the management base is settled, we cannot progress to recording function of basic bookkeeping. It has been explained that accounting is meant for gathering information suitable for users of judgments and decisions, like stakeholders. But generation of such information is preceded by, we read about this, recording, classifying, summarizing data. By that process, it measures performance of the business entity by a profit and loss account and its financial position by way of balance sheet. Thus, Measurement is another important part of accounting discipline. But a set of theorems governs the whole measurement subsystem. What is it? The theorem should be carefully understood to know how the cogs of the accounting will work. Nowadays, accounting profession earmarked three theorems, namely going concern, okay, nice, fundamental accounting assumptions, consistency and accuracy, which are fundamental accounting assumptions. Just read this from here. This is not much relevant. Even if you skip this, it is fine because this is not exactly much of contributory nature. It is not much relevant. So the second part of that unit is valuation principles. There are basically four accepted measurement principles: historical cost, current cost, realizable cost, present cost. Instead of reading the para, I will just explain to you how it works. Historical cost means the amount, the cost. Basically, these are the values you can show in the balance sheet. What is historical cost? Just to make it sense, when you purchase an asset on in 2020 for around 2 lakhs, that 2 lakhs is the historical cost. What is current cost? If you remember in your intermediate, we depreciate, right? For 2025 till 5 years. The life of an asset is for say 10 years. 2 lakh divided by 10, 20,000 into 5, 1 lakh. So 1 lakh is the current cost. Do you get it? What is realizable value? Realizable value is the value, the how do you say, if you sell an asset today itself, how much, what is the value of an asset today? Exactly today. Okay. How much do you realize by selling the asset? Okay. That is the realizable value. If you sell an asset today, how much are the other person going to pay for you today? Not 3 days ago, or not 2020, or 2 years ago, or later. If you are going to sell your own asset today, how much is the other person who is going to buy your asset is going to pay for you, is the realizable value. Where do we use where do we use this realizable value? For going concern. In If there is the question of going concern, like if there is a doubt that company uh, might not be much of a relevant for going concern, they prepare balance sheet based on realizable value, because if it is not going concern, we right away ensure that value of assets are better or not better. We have to know about this present value. I will tell you what to skip, because it is not much relevant for CA foundation, but is relevant for CA final, not even a CA inter. Okay. Present value. What exactly is present value? For example, there is one method of valuation of a business. I'm not talking about assets. In order to value a business, what do people generally do? They project the cash flows. What is cash flow? Cash flow is basically the cash profit, more or less, operating profit. Okay, let's not go into detail. I will explain it again tomorrow. Basically, there is one element known as cash flow. Okay, based on cash flow, based on they project, people like chartered accountants, not this is not chartered accountants role, this is accruals role. People project for the next possible years cash flow. Okay, for the next 5 years, And from the 5 years, they discount it back to today's date so that they get to know the value of business today, right? This is where present value works. If you go to corporate today, present value methods are very much helpful and very much you should know about this. Basically, historical cost means acquisition cost. For example, the businessman purchased for 7 lakh, paid 7 lakh to purchase machine, spend 1 lakh for installation. Acquisition price is 8 lakh, historical cost is 8 lakh. Skip this, especially skip this, okay? I don't want you to get confused. You might read this and this also I do not suggest, but you, if you can. Current cost. Read this example. The answer will be 25 lakh because it is the current cost, right? Realizable value. Okay, just to read the example and what I have told you about. Assets are carried at amount of cash or cash equivalents that could currently be obtained by selling the assets in orderly disposal. I said, present value. Definitely skip this. Do not read this right now. Okay. Suppose we are talking as an 1 1 20. Okay, just read the example. Okay. I'm sorry, I skipped the example before and I'm going to skip this now because example is boring. Do not read this right now. Do not ask me for the ask me how they calculated present value. Because if you ask me, I tell you the formula is right here. Also, it is not relevant for you. Just skip this right now. Right now. Wait. If you want, you just from here, you just go through the example. You just go through the example from here. Okay, because the example is totally interlinked from here till here. Till here. Measurement and valuation. Value relates to benefits to be derived from objects, abilities, or ideas. Values relate to the benefits to be derived from objects, abilities, or ideas. To an economist, the value is the utility. What is utility? Satisfaction of economic resources to a person enjoying its use. In accounting, to mean value of an object, ability of or ideas, a monetary surrogate is used. Accounting, we insist on monetary values. This is to say value is measured in terms of money, right? Suppose an individual purchased a car. Just underline this point, okay? Basically, what they try to explain is that this point value is measured in terms of money. If you are purchasing a car for 2.5 lakh, the value lies in the satisfaction to be derived by that individual using the car in future. Economists often use ordinal scale to indicate the level of satisfaction. But accountants use only cardinal scales. Oh my god, ordinal, cardinal, it rhymes, but I don't know what it means. If the value of car is taken as 2.5 lakh, it is only one type of value called acquisition cost or historical cost. So the value is indicated by measurement. In accounting, the value is always measured in terms of money. Basically, in this entire para, they try to say value is measured in terms of money. Okay, this is the whole point they try to say with an example with cardinal and ordinal scales, which we don't know anything about that. Accounting estimates. Just skip this entire here. I'll tell you what accounting estimate is. Accounting estimate, like we talked about that in yesterday's class, management uses certain judgments based on their past history. Oh my God, sir, I did not understand anything. Exactly, me too. Also, Let's just say there is provision for bad debts. Everyone takes this example. For example, for a company like Reliance Limited, for a company like I have a company. My debtors are 1 lakh rupees. In the past history, my company has been running for more than 10 years. In the past history, there is always around 5 to 10,000 worth rupees of debt. I mean, worth rupees of debtors who did not pay for me for the past 10 years. So, what this is called bad debt, right? If you do not know what bad debt is, it's fine. We'll discuss about this in later chapters. Basically, this is called bad debt. Bad debt means debtors who do not pay to us, who might not pay to us. Bad debt. For example, let's say 5 lakh, 5 to 10,000. We estimate around, we make an average of 7,500 rupees. Okay. How did we get 10,000 plus 5,000 divided by 2? What is this, sir? This is just an average formula. This plus this divided by 2. 15,000 divided by 2. Why 2? Because 5 and 10 are just two values, right? So, management decides due to their past experience of facing bad debts of around 5,000 to 10,000, management decides whether to show bad debts as 5,000 or 10,000 or 7,500. It is exactly the management judgment. This is called an accounting estimate. Why is it relevant? Because imagine, I should have brought my pen. Okay. Imagine if you have shown bad debts of rupees 10,000, your profit, it is double entry system, right? Bad debts. One goes to profit and loss, one goes to balance sheet, trade risk, I mean debtors, and the value will be reduced, right? Okay. Just close your eyes and imagine. One goes to profit and loss in expense, bad debt 10,000 rupees. Then what happens in the balance sheet? Balance sheet will be the difference will be 10,000 rupees for the liability side because net profit goes to capital, right? I will explain this again from next chapter onwards. Basically, net profit goes to capital. Okay. And for capital, since we have shown bad debt as 10,000 rupees, in the capital, 10,000 rupees will be in capital, in profit, 10,000 rupee will be less. But oh my God, but in asset side, there is no adjustment, right? Then what is the logic of double entry system? Hmm, okay, let's do the magic. 10,000 of amount will be less in liable, is less in the liability side. In the asset side, for debtors, since the bad debts relates to the debtors, in debtors, reduce the value of 10,000 rupees. Why do we reduce? Because we have shown as 1 lakh rupees here. But we are not going to realize 1 lakh rupee. We are going to realize 90,000 itself. So we reduce 10, this liability side is reduced by 10,000 and now asset side will be reduced by 10,000. Okay, and the balance sheet will be tallied. This is how we are going to approach the practical problems. Imagine if we show 5,000 as bad debts provision. My God, then the profit is obviously higher than 5,000 if we had shown 10,000. Yes, right? This is why management estimates are very difficult to audit. I asked management estimates. Okay, management estimates are also accounting estimates, management judgments, right? Read all these examples wherever manage, like not wherever, just important management estimates are shown here, and the summary and the test your knowledge questions, right? There are four generally accepted accounting principles. Accepted measure historical current. This is the odd one. We have talked about it in the present value, right? So this is false. Historical cause and price paid at the time of acquisition. True. As per future value, assets are carried at the amount of cash or cash equivalents that could be currently be obtained by selling in the ordinary business. False. It is shown in the not future value. It is shown in realizable value. It is realizable value. At present value, liabilities are carried at value of future net profits, net outflows that are expected to be required to settle the liabilities in the ordinary course of business. Is it true? No, this is not the present value, right? Then what is this? Read again. At present value, liabilities are carried at value of future net cash flows. We never include future cash outflows that are expected to be required to settle in the normal ordinary course. No, this is wrong. Question 5, 6, 7. Let's go to question 7. Change in accounting estimate has effect on retrospective effect. Oh, this is something I haven't taught you, but accounting estimate is not retrospective, it is prospective. Okay. Accounting policies are retrospective. This is false, right? Let's check question number 7. This is the concept is there in the CA final also. That is how I remembered. Wait, I'll check the time. 46. Question number 5. ABC purchased a machinery amounting 10 lakh rupees, blah, 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 blah. Historical cost is 20 lakh. No, it is 10 lakh. This is false. ABC purchased machinery 10 lakh rupees. The question is current cost is 20 lakhs. True. Okay, done. Now MCQs. Measurement discipline deals with, we talked about this. All of following are valuation principles expect future value. Book value of an asset is 10 lakh, market value 11 lakh. If the company values machinery at 11 lakh, what is the principle that it realizable value? Because I told you about this. If we sell today, how much is the amount? The outer person, the other person, the purchaser buys. The amount at which the purchaser buys, right? Ah, right. And there are four MCQs, and we are going to enter the last unit. Hmm. Mon purchased a machinery of rupees 10 lakh on 1 2001. By 2022 could be purchased for 20 lakh, but realizable value was estimated at 15 lakh. The present value discounted future net cash inflows, that is basically present value is 12 lakh. Let's check the answers. First, the present value. They have given this 12 lakh. Historical cost of machinery. Historical cost of machinery. 10 lakh, I guess. Realizable value of machinery. Realizable value of machinery. Realizable value of machinery. They have given this. 15 lakh. Then what is the current value of machinery? That is the question. Purchase similar could be purchased for 20 lakh, which is current value, right? We have done chapter 5, chapter 6, and now we are going to enter the last topic of chapter 1. Oh my god, it is so boring for me. I don't know how you guys are tolerating. I guess which is why the views are reducing significantly. I wouldn't complain because I would not watch these videos either. But it is my duty to explain to you the theory also. I'm not exactly properly explaining. I just, I miss, let's just cover in the next 10 minutes. Accounting standards. What is accounting standards? Accounting standards deal with the issues of recognition, RMPD. Remember the first letters of this: recognition, measurement, presentation, disclosure. We talked about all this. Recognition of what? Of events and transactions. Measurement of events and transactions, RMP. Presentation of those events and transactions. Disclosure of those events and transactions. Because why am I talking about this? Because if we talk, when I, if you try, if you are able to understand here, we can skip a lot of stuff. How do we formulate accounting standards? Accounting standards are formulated by Indian Accounting ICAI along with Accounting Standard Board. First, area identification of area at which accounting standards to be formulated. For example, accounting. I talked about this accounting standard to inventory. Wait, I will show you. Accounting standard is to inventories, valuation of inventories. Imagine if this accounting standard is not there. Just imagine this. Now read this. Area. What is the area? Inventory is the area. So first we identify the area. We identify inventory as the area. Constitution of study group, like you and me. Not you and me exactly, the experts of the respective fields. Okay. Preparation of draft and its circulation. Just forget this preparation of draft. They prepared the draft. Draft means rough overall overview and even in detail, but it is rough, which is not regulated. Ascertainment of views of various bodies on draft. Okay, what are the various bodies? If we talk about inventories, there are various laws, not exactly in inventory, there are certain standards which includes various other laws, and those other laws governing bodies like ICAI and accounting standard boards have to be discussed regarding the topics. Finalization of exposed draft. The draft is also exposed draft. Comments received, first finalize, then comments received, then modification of draft, then issue of standard. Finalize, comment, based on comment we modify, based on modification we issue. First identification of area, next constitution of group. First we identify the area, next we constitute the group, next preparation of draft. Forget this point. Final, after preparation we finalize the draft, we invite for the comments on exposure draft, we modify the draft based on the comments, we issue the accounting standard, and this ascertainment of views of different bodies in draft. Keep this. See, recognition, measurement, presentation, and disclosure requirements of accounting. What are accounting standards? Those are written policy documents issued by expert accounting body. Who? We. We are the expert, and not exactly we. ICI is the expert accounting body or the government or regulatory body covering the aspects of RMPD. Objectives of accounting standards. What are the objectives of accounting standards? Eliminate the non-comparability of financial statements, thereby improving reliability of financial statements. For example, for Reliance and Adani. For example, Reliance follows weighted average method for inventories and Adani follows FIFO method of inventory, which differentiates the profit. Okay. So accounting standards try to reduce those methods, those policies, so that we can compare. The base should be normal, should be equal. Provide a set of standard accounting policies, valuation norms, and disclosure requirements. Self-explanatory. Benefits. Let's read benefits here. Standardization of alternate accounting treatments. Okay. Requirements of additional disclosures. Comparability of financial information. Standards reduce to a reasonable extent or eliminate altogether confusing variations in accounting treatment used in preparation of financial statements. There are certain areas where important information is not statutorily required to be disclosed. Standards may call for disclosure beyond the law, but always remember standards should be less than the law. Statute overrides the standards. Limitations. Difficulties in making choices between different treatments. Alternative solutions to certain accounting problems may have arguments to recommend them. Therefore, the choice between different alternative accounting treatments may become difficult. Restricted scope. Accounting standards cannot override statute. Okay, remember this. Statute means law. The standards are required to be framed within the ambit of law. Skip this. We read it in the beginning of the chapter. Just they explained the names of, they just included the names. Skip this. Actually, our chapter is completed because and the list which is not there in the CF foundation, there is no point of explain telling you the list because this is CA inter 80% syllabus and this is CA final 95% syllabus. Okay, just write this so that you get motivated. Oh my god, we can potentially read this in very soon enough. And true or false? Accounting standards are written accounting documents issued by expert accounting body. True, just true. Accounting standards can override statute. False. Difficulties in making choices between different treatments is one of the benefits. No, it is limitation. So this is also false. Requirements for additional disclosures is limitation of. No, it is benefit. Accounting standard board, not benchmark. There are no limitation to accounting standards. No, there are limitations. Those two. Accounting standards for non-corporate entities is issued by non-corporate entities, I guess ICAI. Accounting standards are harmonizing accounting policies, eliminate non-comparability of financial statements, right? It is essential to standardize the accounting policies and principles in order to ensure transparency and consistency. We have successfully completed chapter 1 except for the part of chapter unit 1 to 3 MCQs theory and illustrations. I guess right now this portion is enough. Okay, we completed accounting standards in 8 minutes itself. So take care. Bye bye. Please like, share, and subscribe so that it encourages me also. But actually, a friend of mine uh, told me, what did she tell me? She told me something. Good night, take. Oh no, not that. She told me, actually, I was worried a couple of days ago. I wasn't updating you. Even if you are a one person, I kept on telling you if you are a one person who are getting benefited, it is enough for me. But few days ago, I was so worried about losing people. Oh my God, I might lose viewers because the viewers have fallen from 20 around 20s to 7 or 8 right now. I was worried. And then my friend told me, you started this channel not for expecting views or exposure. You just wanted to do that. Why are you so worried and why are you so concerned about the views? Maybe it made sense. I'm not like everyone else. I don't obviously if you ask me much more views means I love that very much. That doesn't derive me or define me for what I am. Okay. So I just want to tell you to take care, to study well. If you have any doubts, please comment me below. And I just don't use a proper script to tell you to do this, do that. I tell you what I think. I think in the end of the day, maybe if I prepare a better script and promote the channel, I might win or gain many followers, but that is not the way I approach. I'm not saying that is a bad way. I just am a free flow person. I just want to be natural. Okay. Which is why I haven't done hair transplantation yet. Because this is natural. Few days and my hair will be. So anyway, just be consistent. Just aim for the big, better, be better, do better. You are the best. You are better than the best. Take care. Bye. Wait. I try to complete what the entire chapter one by this night and try to upload that by this night or by tomorrow. Okay. From tomorrow onwards, we can have a lot of fun. We can play a lot of accounting games like Sudoku. Okay. So, right.